All right, now we are diving into NOLs and capital losses even further. We've mentioned them. But here we see that corporate NOLs and capital losses are essential tax considerations for businesses. I mean, tax planning for sure. You could see a sim where it's an NOL schedule, understanding how much you can carry back, carry forward, all that stuff. They can help businesses manage their tax liabilities in the years that they incur losses and offset income or capital gains in future years. Understanding these, like I said, tax planning, we're not here to tax plan. We're here to pass the exam. But why is this important? Again, like I said, you could see a sim that has, let's say, a 10-year span, and you have to understand each year we've got some gains, we've got some losses, some income, some losses. We have to offset the capital losses and NOLs against carrying forward, carrying back based on those limitations. So that's just, again, just an insight into what you will see. All right, items to consider when calculating corporate NOLs. No charitable contribution deduction is allowed in calculating the corporate NOL. We've seen that the charitable contribution deduction is pretty much the last thing there, that calculating that 10%. So these charitable contribution deductions are not allowed when calculating a corporation's NOL. This means that if a corporation has deductible expenses that exceed its taxable income, the charitable contribution deduction must be added back in order to calculate the NOL. For example, here a corporation has $500,000 in taxable income and $550,000 in deductible expenses, including a $20,000 charitable contribution. Now, to calculate the NOL, we add back the charitable contribution to the deductible expenses. So we see 550 minus 20 gives us 530. The NOL here is actually then going to be 30. That's the 530 minus the 500. Next up, dealing with DRD and NOL. So again, kind of dealing with what we saw earlier. The taxable income limitation normally imposed on the DRD does not apply if, after taking into account the full DRD, the corporation has an NOL for the year. So, example, kind of like what we saw before, a corporation has $100,000 in taxable income and $150,000 in deductible expenses, including a $50,000 DRD. Now, after applying the full DRD, the corporation's taxable income is reduced to $50,000. We see the $100,000 minus the 50. Since the corporation still has an NOL of $100,000, that's $150,000 minus the DRD. Taxable income does not apply here. Again, this is essentially what we were dealing with earlier. But we love examples, right? The more examples we see, the more we practice, the better chance we'll have for the exam. All right, next up, NOL deduction for an NOL carryover is not allowed in determining a current year NOL. Well, when calculating a current year net operating loss, a corporation cannot use NOL carryovers from previous years. We'll see you keep a schedule of your NOLs from previous years. Corporation's got $200,000 in taxable income and $250,000 in deductible expenses in the current year. It also has a $50,000 NOL carryover from a previous year. The corporation cannot use the $50,000 NOL carryover to calculate the current year NOL, and the current year NOL is going to be $250,000 minus the $200,000, which gives us $50,000. Not too bad. All right, now we're seeing deducting capital loss carryover in calculating NOL. A corporation may deduct a capital loss carryover from a current year capital gain when calculating an NOL, but it cannot deduct a capital loss carryback against a net capital gain in determining a current year NOL. What do we mean by that? Of course, we got a great example for you. Corporation has $300,000 in taxable income, including a $20,000 net capital gain and $350,000 in deductible expenses. It also has a $10,000 capital loss carryover. The corporation can deduct the capital loss carryover against the net capital gain, resulting in a $10,000 net capital gain. That comes from the $20,000 minus the 10. The NOL is calculated as the $350,000 minus the $300,000, so that gives us $50,000. However, if the corporation had a $10,000 capital loss carryback instead of carryover, it actually could not deduct it against the net capital gain when calculating the current year NOL. In this case, the corporation would have to carry the capital loss carryback to other years to offset capital gains in those years, and the NOL calculation would remain unchanged at $50,000. All right, here are our rules for carryforwards and carrybacks. These are going to be rules that you need to know, and yes, we have real dates here, and yes, these will apply. Yes, this is a sim you could see, and this is tricky. It's very tricky in terms of applying these NOLs in various real tax years. So definitely memorize this, take it into account, And we'll have sims, we'll have prep, we'll have questions for you to use this for. Just memorize this slide. Like, please, I'm telling you, I'm begging you, please memorize this slide. This will help you significantly on the exam. Here are our rules. Again, just more memorization. If you memorize these and then you apply them when you do questions, when you do sims, when you do multiple choice questions, you're going to get them right. This is all it takes. It's just memorizing and then a good little amount of practice. So for corporate net capital losses, you can carry them back 3 years, you can carry them forward 5 years, and you cannot offset other income. We've got individual net capital loss. That's what we saw with individuals, but here it is just as a comparison, demonstrating how these work. All right, we got an example here for net operating losses dealing with our real life years. NOLs occur when a corporation's allowable tax deductions exceed its taxable income for a given year. NOLs can be used to offset taxable income in future years following our rules that we saw. Indefinite carry forward, well, NOLs can be carried forward indefinitely. They're limited to 80% of taxable income. They will be limited to offsetting 80% of a corporation's taxable income in a given year. No offsetting other income. We cannot use NOLs to offset other types of income. We know that that's why we have a difference between operating losses and capital losses and all that. Losses accrued on or before 12/31/2017. If a loss accrued on or before this date, it can offset 100% of taxable income and can be carried forward for 20 years. This is all kind of dealing with the buckets that we saw on that slide. Definitely want you to memorize that there. And then multiple losses. If there are losses from different years, the oldest NOL should be applied first because likely that one's going to expire the soonest. The example here being Corporation A has a net operating loss of $50,000 in 2023. In 2024, Corporation A has taxable income of $100,000. Here, we see that Corporation A can use $40,000. And how do we get that? Well, it's capped at 80% of the $100,000 of the NOL to offset its taxable income in 2024, leaving $60,000 of taxable income. The remaining $10,000 of the NOL can be carried forward to future years. Now, that's a simple application of the rules. Obviously, we can see it much more in depth, and we will. We will have a lot of good practice throughout the course. Capital losses. Here we go. Capital losses occur when a corporation sells a capital asset for less than its cost basis, just like if you did that as an individual. Capital losses can only offset capital gains, and they follow specific carry back and carry forward rules. We've seen this. You should memorize it. You can carry them back 3 years, carry them forward 5 years. Make sure you just memorize that straight up. Nothing too crazy there. Example here being Corporation B has a capital loss of $30,000 in year 4 and capital gains of $20,000 in year 1, $10,000 in year 2, and $25,000 in year 5. Here we see that Corporation B can carry back the $30,000 capital loss to offset the $20,000 gain in year 1 and the $10,000 gain in year 2. In year 5, Corporation B will have no remaining capital loss to offset the $25,000 capital gain. And you see, this is a great example of how they can make this into a difficult sim. They just add more years, add more activity, and just the more they do, the more you have to keep track of. But that's what we are. We're accountants. We have very specific, high attention to detail, and we'll get through it. Here, if you were curious, here are the tax forms. I love looking at them. It really kind of helps you to understand what's going on here. Essentially just a big calculation. It's also like a memorization form. You can kind of see where everything goes. Here are some of the items that we saw specifically, and we'll go to the next page as well. So right here, we see the Schedule C that flows to the face of the 1120. Here are going to be where your DRD are reported. So we see where it applies in our overall calculation. So the DRD flows to the face of Form 1120. Just going back to the original form, so we see how that works there. Again, I find that very helpful. Hopefully you do as well. Referring to the tax forms, I mean, this is really what we're doing. We're prepping to do these. Now, obviously, in the real world, you're going to have a lot of softwares that will do this automatically for you, but that's what we have to do for the exam. Our goal, get you to pass the exam. And in my opinion, this is one of the best ways to do it. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.